You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate investment expert Ian Ross. Ian founded Somera Road, Inc. in 2014 to take an entrepreneurial and creative approach to value-add opportunistic real estate in non-core markets. Since its inception, Somera has acquired over $800 million in real estate totaling approximately 9.5 million square feet across 20 U.S. cities. Now, prior to Somera, Ian was a managing director at Triangle Capital Group, a firm he helped develop shortly after its inception. At Triangle, Ian managed the acquisitions and asset management, focusing on the purchase of hard asset real estate, non-performing loans, and securitized mortgage products, as well as the conception and execution of value-add business plans. Now, prior to joining Triangle, Ian spent 2 years working as an analyst for Jefferies & Company and its investment banking division, where he focused on raising both debt and equity, as well as providing advisory services for companies in the financial services and real estate sectors. And so, guys, I'm real excited to get on to the show with Ian. But first, before we do, I have a few quick announcements I want to make. For those that have been listening to the show for quite some time now, you'll know that, I guess about a year ago, I stopped this. But prior to that, prior 4 years of this show, I used to offer free 30-minute phone consultations on Fridays. I always have a couple time slots available where you guys could basically go into my calendar and pick a time to jump on the phone and connect with me. And I stopped those about a year ago. My bandwidth was spread too thin, and I didn't have the time available to do it. So I've got great news for you. I'm actually starting that up again. In fact, we started last week. I had our first couple calls, and every Friday, I'm essentially going to make myself available for 4 30-minute time slots to discuss anything your heart desires regarding real estate investing. And it doesn't matter whether or not you're brand new or you're a seasoned investor, you just want to talk shop. I'm here. I'm available. I'd love to connect with you. However, there is one caveat. We're going to be conducting this via Zoom, and we'll need to have a camera available as well as a decent microphone. And it doesn't have to be an expensive mic like you might see me use. It could be just a simple USB headset, or even a standard iPhone headset works just fine. And I'm going to be recording these calls and releasing them as future educational content. And really the best part of all this is that our conversation together will essentially benefit thousands of others who probably have similar questions and are dealing with the same exact challenges that you might be challenging, okay? So think of it really as a way of you and I teaming up and giving back to the masses. I really think it's going to be a lot of fun. And again, I just did our first call last week, and it was a great time. And I've got a bunch of others scheduled here coming up. But I still have a lot of time slots available. So if you have an interest in connecting, please go to my website, kevinbupp.com. On the right-hand side, about 3/4 of the way down, there's a button that says schedule a call with Kevin. So go ahead and click on that. It'll take you to my personal calendar, and go ahead and grab a 30-minute time slot off of there. Again, it will be on Fridays only, and I'm going to be making 4 available each and every week. So again, kevinbupp.com. Scroll about 3/4 of the way down the homepage, and there is a button that says schedule a call with Kevin. Go ahead and click that and get to that call. But I will say, make sure that you spend some time, put some information in there about what you want to chat about. 30 minutes goes really fast. So if you've got specific questions, you've got a deal that you want to talk about, whatever it might be, put some notes in there so that I can better prepare for our call together and we can make the most out of those 30 minutes. All right, one other announcement before we get on to the show with Ian. We're hiring here at Sunrise Capital Investors. So as I've mentioned many times over the past year or so, our team is growing at a very rapid rate, and we are seeking some rock star talent to join us here at our corporate offices in sunny Florida. So if you'd like to learn more about the different positions that we have available, you can go to our website. It's careers.sunrisecapitalinvestors.com. And you can, I think there's 3 or 4 positions that we're looking to fill right now. So go check it out. Again, careers.sunrisecapitalinvestors.com. And we'd love to have you join our team. So without further ado, guys, I'd like to welcome our guest for today's show, Ian Ross. Ian, how you doing, my friend?
Hey, good. How are you? Thanks for having me.
Yeah, thanks for joining us here from, hopefully I'm not going to say cold New York. You guys finally warming up there? Because you've had a brutal winter.
I'm from where you can find me 9 times out of 10. Some city in the middle of the coast. Right now, I'm in a hotel room in Kansas City, Missouri, one of our favorite markets.
Got it. Well, good deal. Well, we really appreciate you joining us here. And I know you're a busy guy. Just like you said, you're traveling a bunch. You're out in Kansas City right now. So I gave you a brief introduction to Ian. It was very short. I'm sure there's a lot more to it. So maybe in your own words, from your own perspective, tell our listeners a little bit more about yourself and your background.
Yeah, I grew up out west in LA. Went to Emory University for my undergraduate business degree. Went to Wharton and got my MBA. I really started at Morgan Stanley. That's where I initially cut my teeth doing large loan securitization and origination for commercial real estate assets all across the country, getting exposed to CMBS product and understanding both the debt and the equity side of real estate. I went to Jefferies in the depths of the financial crisis and did some more generous investment banking. And then I came out of there, the first opportunity I saw to go back into the real estate space and help start Triangle Capital in 2009, a firm I was with for about 7 years. We did about $1 billion of acquisitions there, grew the team from really 3 guys and a Bloomberg and a broom closet to an 18-person shop that was investing all throughout the capital stack: CMBS, mezz loans, non-performing loans, whole loans, B notes, rate bonds, fixed and floating rate CMBS. And then we did about 38 hard assets. Bought a property nearby you in Tampa, a flex office building, but really got exposed to a variety of different markets, a variety of asset classes, overseeing an acquisitions and an asset management group, and it's a tremendous experience. So I left the family office and started my own firm about 3 years ago. Somera, as you kindly introduced, is a real estate private equity firm out of New York. Over the past 3 years, we've grown from really myself and then 3 of us to now a 15-person operation, 15 investment professionals. We just actually, as I told you, we closed on our 50th transaction yesterday. We're just shy of $1 billion at this point. We own about 10.5 million square feet. We focus on buying commercial real estate, loans to own, so non-performing loans, and REO assets, and just distressed value-add opportunistic assets. And what we really seek is an asymmetric risk profile where the downside's highly limited and there's a great potential for an outsized upside return. We're fairly agnostic to asset class and geography. We own a fair amount of office, industrial, retail, some student housing, some cold storage, some hospitality, some multifamily. Since the summary you gave, I think that's a little outdated. We're now in about 38 markets.
Okay.
We're here in Kansas City was our first market. We're in St. Louis. We're in Memphis, Nashville, Charlotte, Austin, Jacksonville, Huntsville, Louisville, Baton Rouge, Minneapolis, Las Vegas, Modesto, Tucson, Little Falls, New York, and Pittsburgh, Allentown, and about a dozen other markets around the country. So constantly on the road, really hardworking, lean and mean team, and excited about the operation we continue to grow.
Well, congratulations on that 50th acquisition. That's wonderful news. So
I appreciate that.
So I'm hoping that the 51st will get you over that $1 billion hump. Is that what you're looking at?
The 51st is a $15 some odd million deal in Nashville, Tennessee that we're closing next week. But the 52nd is a $35 million deal, a retail deal in Las Vegas. So we're getting closer.
Okay. Good deal. Well, being that you guys are agnostic to the type of assets that you invest in, I mean, you're opportunistic, you're across the country. I know that you had mentioned before we started the show that you love secondary and tertiary markets. For the sense of the conversation, for folks that better understand on a little bit more granular level of what it is you guys do and really what that truly means, the definition of what you just outlined there in 5 minutes of what it is you guys do, maybe give us a case study. So maybe we should use the 50th acquisition that just happened. You said, was it yesterday that you guys just closed? Okay.
Yeah, it was closed yesterday.
About that deal, maybe, from the beginning of what it is, where it's located, how you found it, the opportunity that you guys saw at hand, and how do you tend to capitalize on that opportunity? Yeah,
so Cleveland's a market I've known for a very long time. I've invested there at a variety of shops over the course of the last 8 years, have a really good network in the market in terms of brokers, lawyers, architects, general contractors, incentives experts. We have a very large crew in Cleveland and that we love working with. So really got to know the market. It's having grown up in LA and New York, a lot of people always ask me, how do you figure out these markets? And the truth of the matter is, no knock on these markets. We love these places, but if you have grown up around kind of sophisticated, highly complex, large scale markets like New York City, and you understand how to underwrite those markets, I could take you to Cleveland and we could look at the 20 relevant office buildings and you could figure out supply and demand, how people live, work, play, move, where they want to be, why they want to be there, and how much their willingness to pay is to be there fairly quickly. That being said, that's kind of how we get to know markets. We own a tower in Cleveland. It's about a 550,000 square foot office building at 45 Erie View Plaza on 9th and Lakeside. We've done a couple other deals in the market in Mayfield Heights, the southern suburbs, as well as in Strongsville, Ohio, which is about 10 minutes south of the airport. We did a retailer and office deal. So we know the market extremely well, and I spend a lot of time there. And we really believe it's a market that's ripe for a next wave of urbanization. I like the Cleveland MSA. The MSA is the Metropolitan Statistical Area, I believe. But I like the broader MSA because, despite the downtown not being as vibrant as we'd like to see from a corporate user perspective, the MSA has a ton of Fortune 500 companies. Mm-hmm. Eastside Cleveland is one of the wealthiest MSAs or areas in greater Ohio, in the greater region. There's a lot of wealth. There's a lot of executives. And there's a lot of companies, a lot of users. And I generally believe that Cleveland is going to continue on the trend that we're seeing nationally with urbanization, millennialization of the downtown. And that's happened in Cleveland in some of the product types. It's happened with multifamily. Their multifamily population has absolutely blossomed. David Ebersol, the chief of economic development, is probably going to slaughter me for botching these statistics, but I think it's about 6,000 6 years ago to about 20,000 downtown residents today. You literally can't build multifamily fast enough for renters, young renters, and baby boomer renters to take it. East 4th Street is a vibrant retail and food and beverage community. The warehouse district is great. The Flats on the East Bank has done extraordinarily well. And there's been a real plethora of either adaptive reuse, historic building conversion to multifamily, as well as low-rise new construction. Mm-hmm. Rents haven't hit a level that can support new towers, but there's a couple projects right now that are getting closer to fruition as we start seeing rents peak above that $2 or $2.50 range. Hotel has also seen a really vibrant resurgence downtown, with especially going into the RNC and with LeBron playing 41 games a year downtown before he went to my beloved Lakers. We did have a real surge of hotel product downtown. Cuyahoga County, which is known as a big swing county, spent a lot of money for the RNC, building the Hilton Convention Center Hotel. The Metropolitan at the 9 was developed there. The Kimpton Hotel was developed there. The Drury Hotel. So there's a ton of hotel supply. So you're starting to see this live, work, play community there. Mm-hmm. The only thing missing in that equation was the work. And when we look around at the corporate users downtown, that is what's missing. And that's what we'd hope to see continues to change. And that's actually why we're investing in office downtown, because we believe that will continue to change. You have the cabs, you have the Indians, you have a community down there. We believe that companies, as they look to continue hiring a younger, more millennial, more urbanized workforce and create a space that helps them hire and retain talent, the real estate in that physical space is going to be very important to them. So that they are not going to want to be in this reverse commute, suburban surface lot parking, dreary suburban office building environment. They're going to want to be something young, exciting, and cool. And that's what we believe will continue to come to Cleveland and continue to come from the suburbs. So in terms of corporate users that are there right now, Medical Mutual of Ohio is downtown. Sherwin-Williams national headquarters or world headquarters is in downtown Cleveland. They merged with Valspar out of Minneapolis about a year ago. And then there's some local banking. All the law firms are downtown. But again, we believe that there's going to be a continued surge of office companies from the region wanting to be downtown. So that is my long summary on Cleveland, and I haven't even gotten into the deal. But
no, that's okay. I appreciate the foundation. I mean, that actually allows a good bit of groundwork for why you guys have chosen that market. So I appreciate the backfill there. Yeah,
and it's not just, I would say Cleveland's not a focal market for us. It's one of a few dozen. I think there's a lot that needs to change in Cleveland for it to really take that next step and progress as a city. I think it's frankly lagging Columbus and Cincinnati. I think it's even frankly lagging Detroit. And there's a campaign led by a good friend of mine in Cleveland called Dead Last. And why is their campaign called Dead Last? It's because Cleveland and Northeast Ohio was on a list, I believe, by Forbes or one of these periodicals that they're dead last for economic growth in the country. So you might ask yourself, okay, why is this guy investing in Cleveland if it's dead last? And I think that goes back to what I was saying initially about our firm is we're very microeconomic focused and basis focused on a deal by deal basis. So I bang my head against the wall about Cleveland all the time. I love the market. I love the people. I love the potential. And I hope that dead last starts to change. But that doesn't mean you can't find a good deal in a less robust market.
When you're dead last,
So,
the only way to go is up, right?
Exactly. There's no falling knife. It's only going up. I was actually telling investors that exact line, and I was smacking myself. Am I actually saying that as a reason we should invest here? But we did. So why 1020 Boulevard? So 1020 Boulevard is a deal on Boulevard Street and East 9th Street. It's just off the corner. East 9th is a really prolific kind of main thoroughfare and artery in and out of downtown, right by the highway that can take you east towards the kind of old money suburbs, west towards kind of your new money suburbs, south towards the airport and more of your workforce housing. By the way, north puts you into the middle of Lake Erie View. So,
and this is an office building or is it retail?
Yeah, so it was kind of sold to us from a seller who wasn't really a true kind of real estate operator. They're a parking family. We saw the deal off market. They were looking for liquidity. They had just sold their parking company. They basically sold their parking company to what we're seeing a lot in the parking space, which was kind of these private equity backed roll-ups of parking operators. So they sold the parking company to a parking roll-up out of Canada, and they were trying to. So when you think about that, what they're really doing is they're selling all of these master leases and the cash flows that come with them to an operator, right? So the operator doesn't want to buy real estate. That's an asset light model. So, but they do want to make sure they have all the leases. Well, the family that sold us this building owned the real estate. Now, the buyer of the company isn't buying the real estate. They're just buying the cash flow streams. They're buying the leases. So initially their plan was to sell the building to us with a lease back that they could then sell to their parking operator roll-up entity. We ended up going with a different parking operator. So that didn't play out as planned for the seller. Yeah, so they weren't really maximizing the building's potential as an office building or as a real estate asset. They're really focused on the parking component, which I'll get to. So the building's 106,000 square feet of historic brick, wide open, beautiful floor plates. 36,000 square foot floors on floors 2, 3, and 4. It's 5 iron away from Progressive Field where the Indians play and from kind of main of downtown Cleveland. On the first floor and on the adjacent lots sits 375 stalls of parking. Those are in a combination of covered lots, open surface lots, and structured parking garages. And what you've seen in Cleveland as the market has continued to compress is parking has become a very valuable asset. Parking rates can get up to the $250 per stall per month range for reserve parking, generally fluctuates somewhere around 120 to 150. So what we're able to do with a parking operator is sign a long-term, I believe a 10-year, and I have to talk to my team about the specifics, it's about a 10-year triple net, $450,000 triple net lease on the parking asset. And, if I was to kind of cap out value on that, I would say it's probably about a $7.5 million value at prevailing cap rates. If we were to look at kind of what's that 375 stall parking, $450,000 triple net income stream worth. So I went a step ahead, but we bought the building for $10.5 million. So if we're looking at the building at $10.5 million and the parking $7.5 million, what we effectively got to in our minds is, hey, we're buying these 3 floors of office buildings, floors 2, 3, and 4, 108,000 square feet for about $3 million as is. So I think it was somewhere around, my quick math is failing, about $28 a foot. Now, do I want to be buying more and more Cleveland office building? Maybe not, but do I feel pretty good about a $28 a foot basis with consistent credit cash flow on my parking? I'm okay with it. And,
I love that.
And what I like about this office product is it's what we're seeing across the country in all of our buildings nationally. It's cool, creative, modern, millennial, exposed brick, polished concrete floors, open ceilings, really cool, efficient, large open floor plates. What we're doing on the fourth floor there, above the fourth floor, is we're building this really nice roof deck that looks out into Progressive Field. It's got a really nice little lobby that we can modernize, 2 solid functioning elevators. It's good, clean space. And you know, Cleveland office, if you paint a broad brush across the product, some of which we own in our office tower down the block, is not performing all that well. But one thing I would tell your listeners is you can't just like read a Cushman or a CB or Newmark report and immediately understand. Like, it's such a generalization to say, oh, well, the office market is 86% occupied. Yeah. You got to really look at what is that product. And our product at Boulevard, which I think we're going to name the building the Simon, the product at the Simon is the kind of product that tenants want. And it's the kind of product that I believe, knock on wood, will lease extremely well, while some of that 80s vintage, stodgy office tower, legacy stuff might not.
Yeah.
So that's how we got there. And there's one other very key point I have to add. The deal is in an opportunity zone, which is something that Somera has focused on. And I skipped over, unfortunately, in our intro, but Somera has been extraordinarily active over the last about 16 months in the opportunity zone space, learning absolutely everything there is to know about the program and what fits and what doesn't. This was our 4th opportunity zone deal that we've closed to date. I think we're one of very few firms out there across the country that are not just talking about it, but actually doing deals. We've closed, as I said, 4 specific opportunity zone funds, multi-member special purpose entities to close each of these specific deals. So that kind of gives you my spiel. It's a 10-year hold. That's why we like the deal. We were able to raise the debt and the equity fairly seamlessly. You know, we make a single-digit return if we lease a floor. We do pretty darn well if we lease 2 floors. If we lease all 3 floors with a credit tenant, it's an absolute home run.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my 2 podcasts, Real Estate Investing for Cashflow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASHFLOW without the O. Again, that's 833-CASHFLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning to the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. So is the building vacant when you purchased it, or are there some existing tenants in place?
Entirely vacant.
What kind of CapEx income,
obviously?
Yeah, sure. What kind of CapEx are you guys looking at as far as getting it in leased up, ready condition?
What kind of TI?
Capital improvements. Right, to get there. I mean, how much?
CapEx. Sorry, I didn't hear your term. So the CapEx to get there, we're going to spend about $1.5 million in base building work off the bat.
Okay.
That'll consist of updating the lobby space, which, by the way, if I can go on a quick tangent there, what's the highest and best use today of, and that's a term we use and think about a lot, but what's the highest and best use of ground floor space in Cleveland?
You got me. Not sure. You tell me.
I'll tell you, especially in today's retail environment, it's not retail, right? So what I love about this building is that because they were parking guys, they took the ground floor, which would be either retail or lobby, and they created a very small, efficient little lobby, and it's all parking on the ground floor of the building, which is income-producing space and really makes sense in a market like Cleveland. It also provides a really nice efficiency where you can drive into like the ground floor of the building and jump into the elevator and take a ride up to your floor. So anyways, in terms of CapEx, we're spending $1.5 million on the lobby, on the roof deck, and on white boxing some of the floors.
Yep.
But pretty clean building. We're doing some tuck pointing on the side of the building, maintaining some of that historic architectural intricacy that we want to preserve, potentially looking at some historic tax credits for those elements. In terms of TIs, TIs are really going to depend on lease term and credit, but we'll end up spending about another $5 to $6 million on the property.
Yep. Got it. So very, very interesting. That's a unique play. I love it. I mean, really the parking aspect kind of sealed that deal for you guys. I mean, it really turns into a no-brainer. I mean, obviously if you can't lease the space, if you can't find tenants to lease the damn space, and it doesn't, right? But I mean, that's, you guys have done your homework on the marketplace. It sounds like it's a prime position asset for well below replacement.
For sure.
What would replacement be? Just generally speaking, forget the actual land component, just the actual structure itself. Any idea what it would cost to rebuild that today in today's world with construction costs where they are?
Yeah, I mean, listen, we think of like high-rise office as like a $350 product. I think of like low-rise office like this as like a $250, $240 to $260, depending on the TI construction project. But that being said, like nobody builds buildings like this anymore. Right. This is a historic brick building. Mm-hmm. It's funny you asked me that, Kevin. We price new construction all the time. I couldn't tell you what it costs to build a 4-story brick building because nobody does that anywhere anymore, like laying bricks. But I'm going to check on that.
That's a good point. Can you even buy that many bricks at one time?
I know, right?
No, seriously. I mean, that's one thing. I don't know if homes up in the Northeast still get built out of real brick or not, or if it's just more of a brick facade. But I mean, obviously, that's you just don't see it that often anymore. No, that's very exciting. I had a question about the parking component and how that ties into with the available spaces for the potential tenants that might occupy that office space. I mean, did you guys set aside a certain number to go along with
it's
3 floors?
It's a really good question. We actually have our deal with our operator is we have the ability to direct up to all of the parking to our office tenants, assuming we are at market rates. And why would the parking operator care, right? They want income. So it's really a win-win for everyone. For the reason the parking rents are so strong is we're walking distance to Quicken Arena where the Cavs play. We're walking distance to Progressive Field where the Indians play. And we're really at the entrance or the gate to downtown. So there's a lot of demand drivers from a 24/7, 365 perspective. We're also near some multi and near some office. But yeah, so to answer your question, Kevin, what we have to offer to our tenants is actually an unmatched parking ratio downtown. We can provide about 3.7 per thousand parking stalls at pretty compelling market rates. And we can provide them adjacent and covered to the building where you don't have to kind of go outside in a market like Cleveland and bear the elements during the winter. So I missed that when I was talking about kind of what's compelling about our location. But when we think about this millennialization, urbanization in downtown Cleveland, what's nice about this asset is it's walkable within downtown for a live, work, play environment for kind of your millennial or empty nesters who have moved down there. But it's also highly accessible for your older workforce who's relenting to the downtown and who's driving in. Great parking. Don't have to deal with traffic of downtown because we're right at the edge of the downtown. So great parking, great access, limited traffic, and really easy to get in and out of our building and go in a multitude of directions. So, but to go back and definitively answer your question, we have a lease back right or direction right, if you will, to direct the parking that the operator is leasing back to our tenants. We have that first right, assuming it's at market rates.
Got it. What? And I don't want to go off the rails here too much. I'm just talking more to the parking again because it's a very interesting. I'm glad I picked the 50th deal to talk about as a case study because there's a very unique component here and to how you guys actually envision the value, which a lot of others could have just simply passed over, right? And so there's actually two parts to this question, not even necessarily related to one another. But first and foremost, how did you guys initially identify the opportunity with this deal? I mean, was it brought to you by, I know it was off market, but was it brought to you by a third party, a broker, someone that said, hey, like, here's a great opportunity and here's why, like based on the parking component and you're essentially getting the building for a fraction of replacement cost? Or was it brought to you guys as an office play, overpriced office play, if you couldn't understand the vision behind the parking aspect of it, and you guys basically dissect it and said, there's something more here. This isn't just an overpriced office. Like it's got this incredible parking component that has a lot of value to it.
Yeah, to think back, and we've been pursuing this for a long time. To your point, Kevin, if it wasn't for the parking, we might have not done the deal.
Yeah,
I'm not in the business of buying vacant office in Cleveland without any cash flow.
Sure.
But to think back, I think a friend of ours in the market said, hey, these guys are selling their entire parking empire. They're going to be left with some real estate assets. Let's get in front of them. And, I think one thing that you asked around the country about our team, we're responsive, responsible, we're hardworking, we're aggressive, we're entrepreneurial, we're well capitalized. We carry ourselves with unmatched level of professionalism. And most importantly, we do what we say we're going to do. And I think by kind of taking that approach, we've become a great liquidity provider to a lot of sellers who are looking for surety of close and transparency with regards to selling their real estate. So I think it made a lot of sense for the family. Yeah, that's kind of how I came to it.
What the capital stack look like on this deal? I'm assuming you went into it with already probably a letter of intent on the parking from the parking operator. So you guys had
We actually had a we actually had a fully signed lease before we closed.
Yeah, that helps. And so was it bridge debt or? Yeah,
we take out a fair amount of financing, so pretty well versed in that marketplace. The bridge debt financing market, largely due to CLO execution, has really compressed, and rates are the risk premium in that space has compressed, even as the risk-free rate in the Treasury continues to gap out. We took out debt from a regional provider. I believe it was around LIBOR 375, 400, which is, I think it's LIBOR 400, which is fairly market. It was with 75% LTC, 3-year paper with 2 1-year extensions, and I believe a 12-month minimum interest period. So if we sign a lease, we can get in and out of this with a year of yield maintenance. And those are generally, that product as more and more debt funds have come into the picture, has got more and more commoditized. We're really largely seeing 70 to 80% LTC, LIBOR 300 to 450, depending on the existing cash flow in the market and the credit. And we're seeing most lenders open to that, even with a 3-year term at our option, open to that 9 to 18 months of yield maintenance or minimum interest.
Mm-hmm. Got it. Okay. Good deal. Well, real excited for that one. I mean, congrats on the closing again. And yeah, looking forward to, I'd love to have you back on in like a year and actually get an update on that. I think that's a pretty cool story that you gave.
Sure.
Appreciate you sharing all the details with us. And I want to be respectful of your time as well, Ian. And, so we're kind of moving on to the end of the show here. And there's so much more we could talk about. There's some other questions I had, but again, we've only got so much time here on the show to do that. And so I'd like to ask you this, and you can pick the point in time you want to go back to, whether it's Somera Road or whether it's the life prior to Somera Road. But if you can go back, to that year one, again, starting point of whatever different endeavor you want to choose, after knowing what you know today, all the different skill sets you've learned and all the different transactions you've been involved in, if you can go back in time, give yourself some advice, what would that advice be?
I think if I was to go back to 2012, 13, 14, I think I passed on I'll tell you two things. I passed on a fair amount of multi, and the opportunity today to buy distressed multifamily or student housing or any type of housing category is really few and far between.
Yeah.
As just we continue to need and build, we're undersupplied and over demanded for multifamily product. So it's so hard to buy good product below replacement costs. I probably would have done a lot more of those deals and not been as particular with the multifamily we acquired. I would have loved to own a lot more of that, as everything in that space is compressed. The other thing I would have done differently is I wouldn't have wasted as much time. I can't think of how many days, weeks, or months I've spent looking at distressed malls and trying to figure out what's next there. I'm a deal junkie, and I love chasing the deal, figuring out the deal, and passionate about real estate. If any of your listeners have figured out the mall game in an earnest way and proven it out more than once,
right?
I'd love for a call, and I'd love to hear their wisdom and hire them. But I think by and large, in a larger scale, it's kind of a fool's errand, and probably spent too much time trying to be the wizard of distressed malls.
There's been a few folks out there that have done quite well with it, right? I mean, are there any companies out there that you're aware of that are solely focusing on repurposing malls across the U.S.?
I think that there's such the mall REITs certainly are not, right? Companies out there, there's a couple companies I know that are buying distressed malls, but in terms of complete repurposing, a lot of folks are looking at it as fitness plays. A lot of folks are looking at it as healthcare conversions, storage conversions. But I'd say, honestly, that the amount of effort it takes to repurpose one of these things, to do it in scale, is very challenging. One thing we were seeing early on with distressed boxes was this concept of turning malls inside out, which I think did work really well in the right mall. So maybe that second mall in a 3-mall market, where you take the vacant boxes, and if there was enough demand and velocity, you could flip a vacant Sears that faced inside into an outside facing grocer, right? But I think, there's just not that many large retail tenants or large tenants in general out there that are actively in expansion mode. And we have a really tough time with those legacy malls.
Yeah, that just happened actually at a mall by our house. Sears, initially the first level of Sears went out and Whole Foods went in, and then ultimately a year later the top level of Sears finally went kaput. So
what are they putting in there?
Well, they put a Whole Foods down below. I don't know what they put up down. They haven't put anything up above yet. So, and it's been vacant now. I mean, I don't know if they're working on something, but it's been, the top part's been vacant for about a year. So
Amazon will put a distribution center above their Whole Foods and fly drones out the roof of the Whole Foods. Yeah.
Well, I wanted to get into the question. I had another question about the parking thing, but again, we're pretty much out of time. I was going to ask you about, I know you guys are really in this for like a 10-year play, this, the office building there in Cleveland. I was going to ask you really your thoughts on autonomous vehicles and how that might play into kind of the second phase. If you guys decide to divest of this asset along with that, the parking asset itself, obviously I'm sure the operator will be looking hopefully for a lease renewal and whoever that next buyer might be will be buying it for the same purpose as you and have an interest in the parking asset and the office asset as a combination. But how does autonomous vehicles and self-driving cars and all that, how do they play into the value of that type of space, of parking lot space in the future? That's
I think that's a really good question. I wouldn't build parking today. We're big proponents, specifically here in Kansas City and in Memphis and in Nashville, of shared parking arrangements as kind of more, especially in an urbanizing environment. Millennials are, I just took a bird from a meeting here, an electric scooter. There's a streetcar, there's Uber, there's Lyft. So you have ride sharing, you have scooters, you have bike shares, you have streetcars, you're walking, you're living and playing downtown. So I think cars become less and less relevant. On top of that, you also have autonomous vehicles where parking obviously becomes less of a need. We spend a lot of time in Pittsburgh. We own a really large project there called Southside Works. Pittsburgh is really the home of AI, robotics, and autonomous vehicles, with Uber and Ford's group, I can't remember their name, being out there in the Strip District in Hazelwood. It's going to happen. I don't think it'll happen that quickly. To your question on investing, we're not going to invest in building new parking structures because of kind of all those trends I just mentioned. Does it come into mind when we're saying we're protected with a lease? Existing parking, I think I'm not as concerned with existing supply as I am with new supply, if that makes sense.
Yeah. I mean, at this point in time, it's more of a covered land play for you guys. I mean, but you're not looking at building.
Exactly.
Yeah. No, I got you. Okay, fantastic.
100%.
Well, now we're rolling into the end of the show here, and I like to go into what I like to call the golden nugget segment, and this is where we're going to wrap things up. You've shared a lot of great information today, lots of gold nuggets already, but if you had just one of those gold nuggets left in your pocket that you could share with our listeners that may inspire and motivate them as they progress in their real estate investing career, what would that one last gold nugget be?
Yeah, one thing I always like to tell my team is, and it's kind of cheesy, but there's a quote in our office under the front door as you walk out that says, "Nothing is hard." And listen, there are things that are hard in the world, neurosurgery and I don't know, building rockets. But in our business, we're in the information gathering and due diligence business. We're in the listening business. I'm just trying to learn information and input that information into our analysis. It's not that hard. And I try and make sure our team understands that every day. It's about working hard and working smart and figuring out those inputs. It's about getting an OpEx number and saying, oh, hey, the OpEx is $9, and not stopping there, but saying, why is it $9 and what are the line items that comprise that? It's about saying, hey, the CapEx is $1.5 million. Well, why? And figuring out all the components that get there. So we really try and push that on our team, understanding the information. It's not too hard. You just got to press it and really get into the granular details and work hard to do so.
No, I love everything about it, man. I really appreciate it, Ian. Appreciate you coming on the show. This has been an excellent interview. And for folks that want to go learn more about Ian and his company, they can go visit his website. It's someraroadinc.com. That's Somera, SOMERA, Road, Inc., INC.com. And Ian, that's all we have, my friend. Really appreciate you coming here. And it's been an absolute blast. And I look forward to having you back on a future episode, my friend.
Well, I appreciate the time. Thank you so much for having me.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.